Some stocks that have high dividends can also give you the potential of capital appreciation, meaning you will still get more than MP2. Some stocks that have low dividends but have high capital appreciation will still beat MP2 as well. However, this is where MP2 is better because MP2 gives you predictability, meaning you already have an idea of what you could possibly get. Unlike the stock market, there could be some stocks also that could have underperformed, or there could be some stocks that their stock price have gone down. Capital appreciation. Capital appreciation is not just you earning cash flow from the stocks that you buy, but capital appreciation gives you the ability to earn by buying low and selling high. MP2 does not have that, meaning if you place 100,000 pesos, at the end, it will be, because it's compounding, you will get a higher amount. However, it may not be as big as compared to the stock market, as compared to buying stocks that are relatively lower and selling it at a higher price as well. In this video, let's analyze which is better, MP2 or if you are buying stocks and after the dividends. So MP2 versus common shares with dividends is up next. If you want to know more which is better, check this video out. MP2 series where we talk about what the Pag Ibig MP2 really is, how good it is, how bad it is. In the previous video, I talked about the negative aspects about it, and part of that also is what I've mentioned, that there will be some options where the stock market, if done well, and if stocks that you have bought will perform better, then it could actually beat the Pag Ibig MP2 as well. So please remember this, and I've said this over and over and over and over again, that there's no such thing as the best investment. It's all about finding an investment that fits you. It's all about finding an investment that fits your risk tolerance, your lifestyle, your amount that you are also putting in. Now, for this video, I want to drill down on which is actually better, if you just bought MP2 and you bought stocks per se. Please remember this, since I don't know yet what the 2019 results are for the dividends of MP2, and we don't know also what they will give for 2020. We can just make assumptions. So this will be under the context that, let's say Pag Ibig MP2 will give you 7%, and then let's compare them to some stocks that based on the 2019 dividend yield, head to head, which will be better. So please remember, dividend yield is based on also the dividends that they gave out plus the price that you bought it. Just to make everything standard, I will use the stock price at the end of the year. Then I will base it also on the 2019 dividend. So another assumption is that they will just give out the same dividends. What they gave out from 2019 to 2020 will be the same. So that's an assumption. However, also there can be also differences, that if they give more, then of course the dividend yield will be higher, or if they give less, the dividend yield will be smaller as well. For those who watched the videos that I created, I made a video just a few weeks ago noting the top dividend yielding stocks. So I'll just base it from there, and let's just see from the top 15 stocks in terms of dividend yield based on the closing prices of 2019 plus the yield that they got in 2019, which is actually better. So if you're excited about this, comment "I'm excited" below, and comment "I want to see more," so that we could proceed to the next video. So now this is how it actually looks like. We're just gonna start from 15 all the way up to number 1, and let's analyze them one by one. By the way, if dividend yield is a bit glaring for you, you don't know what it means, we have a course of fundamental analysis this March for Stock Smarts Manila. We will talk about technical and fundamental analysis. The details are in the description. And for those who want to learn technical analysis, we have technical analysis in Taiwan, in Singapore, in London, and also in New Zealand. The details are in the description for those who want to join us as well. Now, back to all of this. As you can see, ROCK closed 2019 with 2.04, giving you a dividend yield of 4.07. So that actually means MP2 versus ROCK. MP2 did better yield-wise because 7% versus 4.07, MP2 was much better just from a dividend perspective. FLI 4.12, MP2 did better as well. AP 4.30, MP2 did better as well. Globe 4.30, MP2 did better as well. Call Financial 4.5, MP2 did better as well. PSE 5.03, MP2 did better as well. Meralco 5.07, Shangri-La 5.48, Semirara 5.67, MP2 assuming that it's 7% did better. However, if you go up the rung, DMC 7.26, PLDT 7.29, Cebu Pacific 7.82, GMA 7 8.44, Manila Water 8.79, and SPC 13.43. They did massively better than MP2 as well. So why am I saying this? If you're comparing MP2 between stocks, now the answer is it depends. It depends on what stock you buy, when you buy, and the timing. Because when the difference between the stock market, there's a timing element. That's why we talk a lot about technical analysis. We also talk a lot about valuations, because we're not just buying stocks blindly. We're buying them based on what we know, based on where strategic support areas are. We're buying them also based on the fair value, if it's actually cheap. We're buying them also if the PE ratio is dictating if the stock is actually cheaper as well. And this time, one of our narratives is the dividend yield. So for those who bought stocks that DMC, PLDT, Cebu Pacific, GMA7, MWC, SPC, then last year, assuming that Pag Ibig MP2 gives you around 7%, your dividends from those stocks would have beaten MP2. But if you bought other stocks lesser than it, other stocks and above and beyond what I mentioned, then MP2 would have done better from a dividend perspective. The only thing though, the ones that I'm mentioning here, by the way, are mostly common shares. There are some preferred shares that would beat it. Like Phoenix Preferred also is more than 7+%. The only difference though with Phoenix Preferred is that Phoenix is gives you 10, you have to pay 10% tax. This dividends also would give you taxes as well, but for MP2 it has no taxes, so you also have to be sensitive net what will you earn more. However, this is where the stock market will beat MP2. What I've just mentioned are dividends. The fact of the matter is some stocks can give you capital appreciation. Capital appreciation is not just you earning cash flow from the stocks that you buy, but capital appreciation gives you the ability to earn by buying low and selling high. MP2 does not have that, meaning if you place 100,000 pesos, at the end, it will be, because it's compounding, you will get a higher amount. However, it may not be as big as compared to the stock market, as compared to buying stocks that are relatively lower and selling it at a higher price as well. So if I will put it side to side, the benefits of it, some stocks that have high dividends can also give you the potential of capital appreciation, meaning you will still get more than MP2. Some stocks that have low dividends but have high capital appreciation will still beat MP2 as well. However, this is where MP2 is better, because MP2 gives you predictability, meaning you already have an idea of what you could possibly get. Unlike the stock market, there could be some stocks also that could have underperformed, or there could be some stocks that their stock price have gone down. If you also looked at Ayala Corporation, Ayala Land, Jollibee, some of those stocks did not perform also well. And if you notice it also, on the top here, you see Cebu Pacific. Cebu Pacific last year crushed it, meaning they did perform very, very well. The stock price, the dividends wasn't only good, but the stock price also performed better. Why? Because in the years back naman, their stock did not do so well. So that's something that can happen in the market. There will be some stocks that on some years they're doing bad, but because they did bad on previous years, this year their stock price would do well. Unlike in MP2, you can't predict that. You wouldn't see those volatilities and those swings. So why am I saying this? Of course, there will be people that will say, why not just invest in both, do MP2 and do stocks? Of course, do that. You do that. If you have the ability to invest in stocks and MP2 at the same time, you do that as well. This is merely for comparison basis, that if you want to build a skill set in the stock market, then of course, the stock market will help you if you know how to time it well and you know how to pick well. Then by all means, go into the stock market. But if you think in your heart of your hearts you cannot take the volatility, if you see stocks swing like this, you cannot sleep very well, then by all means, MP2 might be better for you. This is just merely me showing you that the higher the risk, meaning you take on more volatility, you could possibly earn more, but it also gives you the ability that if you buy the wrong stock or you buy the right stock and just time it wrongly also, you could also lose money as well. But in MP2, you don't have that. It will always just be upside, meaning you may not earn as much, but you may not lose as much as well. And that's what MP2 can give you. It can give you purely upside without the possibility of losing money as well. So I hope I was able to present this in a way that MP2 is not better than stocks and stocks is not better than MP2, but it's more of how you implement it and how you execute it. So my suggestion, that's why if you've been following the videos that I've been doing, I always encourage people to be practitioners, meaning you try stocks for dividends, then you try MP2 for dividends as well, then see after 5 years what's performing better. If you're earning more in MP2, then for the next 5 years put more in MP2. But in the first 5 years of you trying it, you're earning more in stocks, then by all means your next 5 years put in more money in the stock market naman. So that's how you can do it. It's not, don't base it on theory, don't base it on numbers, base it on your actual experience, because especially if you're talking about the stock market is all about skills. If you're earning more in the stock market, by all means put in more in the stock market. And I'm saying this over and over, if you're going the stock market route, the stock market will give you not just dividends but capital appreciation. MP2 will give you compounding, it's not interest, but it will give you compounding returns, especially if you reinvest the dividends. So this one can give you predictability. It will be a bit slower. This one, the stock market, can give you more. It will be faster, but it can also give you the possibility of loss as well. I hope you got something from this. I hope that it gave you insight on which you think is actually better. Where will you invest on? By the way, where do you want to invest more? Comment stocks if you still want the stock market more than MP2. Comment MP2 if based on what I showed you, you want MP2 more as well. So I guess that's it for now. I hope this gave you enough insight on how you can decide about your investments, because for you guys to execute. And that's why I've been posting as much content as possible so you guys can analyze and do well in terms of your investment, so you can analyze and do well also in terms of the other things that we're going to talk about in the next videos about MP2. I'm going to compare MP2 against mutual funds. I'm going to compare MP2 against preferred shares, up against the PSEI, up against common stocks. Then we're going to do Tagalog videos also of MP2. Then we're going to also talk about MP2 up against SSS, MP2 against the Premio bonds as well. So just comment below if there's anything that I missed there, or if there's anything out of all of these MP2 videos that I was not able to do. But we are still on video number 6 of this MP2 series. Rest assured, I'm gonna do as much videos on this as I can so that you get educated as well. For those who want to know more about our seminars and those who want to know more about the book series, links are in the description below. And if there's one thing I want to leave with you is this, and I'll say this over and over: no one will protect your money more than you. That's why you have to spend the time to learn. You have to spend the time pursuing your dream, and you don't rely your financial future on other people. You have to do it yourself. That's it for now. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all. Hi everyone, this is Marvin Germo. If you're new to this channel, please subscribe and smash that bell so you get updated every time I come up with new content about investing, about the stock market, and this time about MP2 and comparing them. If you want to know more, I hope you stay up until the end of the video and subscribe and hit the bell.